For the second day in a row, we've got a major transaction on our hands. Hot off the heels of Probe Gold announcing they've reached terms to be acquired by Fresnillo, another Canadian operator is being taken off the market by a foreign firm. On Monday, Chicago-based Coeur Mining indicated that they have come to terms for the acquisition of New Gold in a transaction that aims to turn Coeur into a cash-flowing behemoth and one of the world's top 10 precious metals miners. But unlike the Probe Gold deal, which was all cash, New Gold shareholders get to participate in the upside of this transaction, with Coeur set to use their equity to acquire the gold producer. Let's dive in. Coeur Mining is looking to make a free cash flow monster within the precious metal sector. The company is set to acquire New Gold just as New Gold approaches the runway for free cash flow takeoff. Whereas other transactions in the industry are centered on production metrics on a per ounce basis, or ounces in the ground, or even the future development of a new asset, that doesn't seem to be the case here with Coeur. Instead, the words cash flow were mentioned a total of 24 times in the associated news release published by Coeur on the transaction. And well, the first sentence of the news release features the angle of the acquisition prominently. It reads, "The addition of New Gold's 2 Canadian mines results in a combined company with 7 North American operations, generating $3 billion of expected EBITDA and $2 billion of expected free cash flow in 2026 from production of approximately 20 million ounces of silver, 900,000 ounces of gold, and 100 million pounds of copper." For comparison, Coeur pre-transaction in 2025 is anticipating EBITDA of $1 billion and free cash flow of $550 million. Just to give you a sense of how much New Gold is expected to contribute to the company. Mitchell Krebs, chairman and CEO of Coeur, summarized the situation sufficiently, stating just 2 years ago, Coeur's full-year EBITDA totaled $142 million and their free cash flow was negative $297 million. Even comparing to our expected approximate $1 billion of EBITDA and $550 million of free cash flow in 2025 highlights the extent to which this transaction helps accelerate Coeur's ongoing repositioning as a larger, more resilient, lower cost and lower risk company. So what exactly does New Gold bring to the table? Well, our coverage on their Q3 earnings was published earlier this week. But here's a quick summary. New Gold in the third quarter produced 115,000 ounces of gold and 12 million pounds of copper, a total cash cost of $639 an ounce, and all-in sustaining costs of $966 per gold ounce sold on a byproduct basis. Net earnings on an adjusted basis totaled $200 million, or 25 cents per share, while cash generated from operations just in Q3 totaled $300 million, while free cash flow totaled $205. As a sign of just how quickly things are scaling here, year-to-date production has totaled 246,000 ounces of gold and 39 million pounds of copper, while adjusted net earnings sit at $301 million or 38 cents per share. Cash generated from operations for the 9-month periods totaled $571 million, which isn't even double the Q3 results alone. And free cash flow totals $292 million year-to-date. Production here comes from 2 mines, New Afton in British Columbia and Rainy River in Ontario. New Afton this year is anticipated to produce 60 to 70,000 ounces of gold alongside 50 to 60 million pounds of copper, while Rainy River is expected to produce 265 to 295,000 ounces of gold. While New Afton is a steady producer, the real prize here is Rainy River, which year-to-date has accounted for $215 million of that $292 million in free cash flow. But both are expected to see production bumps going into 2026, with production next year estimated to be in the 435 to 490,000 ounce range, and 2027 production to be in the range of 375 to 445,000 ounce range on a consolidated basis. Copper production, meanwhile, is expected to grow to 95 to 115,000 tons a year by 2027, which will significantly offset per ounce costing metrics. Costing on a per ounce basis is expected to crater, with all-in sustaining costs on a byproduct basis expected to be between $400 and $500 an ounce by 2027, driven by the completion of the Phase 5 expansion at Rainy River and that onslaught of copper production. At $4,000 an ounce gold, that translates to margins of about $3,500 an ounce, driving incredible free cash flow just as production heats up. So what do the terms look like? Well, New Gold shareholders are set to receive half a share of Coeur for each share of New Gold they hold. At the time of the announcement, that ratio implied consideration of $8.51 per share, although Coeur's stock cratered by 12% on the day of the announcement, dropping the actual value of the deal. The figure at the time amounted to a 16% premium to the prior closing price of New Gold and implied a total equity valuation of $7 billion based on shares outstanding. Enterprise value here sits at about $7.3 billion, after taking into account $123 million in cash and $394 million in long-term debt. And New Gold shareholders are expected to own 38% of the resulting company, putting this transaction closer into the merger category than that of a straight acquisition. As part of the arrangement, Patrick Godden, CEO of New Gold, is expected to step onto the board of Coeur along with one other nominee, while several members of the New Gold management team are expected to stick around. For Coeur, this transaction is said to be accretive on all key per-share metrics, which include net asset value, operating cash flow, and free cash flow, which they think will lead to a repricing of their stock. And for New Gold shareholders, the draw here is largely the ability to participate in the future of Coeur, which they say now consists of a well-balanced portfolio of mines across North America while retaining exposure to New Gold's assets. Post-transaction, Coeur is expected to be among the top 10 largest precious metals companies globally, and amongst the top 5 silver producers with a total of 7 wholly owned operations across Canada, the US, and Mexico. The transaction is set to close in the first quarter of 2026, with termination fees of $414 million in place for Coeur and $255 million for New Gold, which practically ends any potential for competing bids. There is, of course, a nationalistic angle to this. Coeur is Chicago-based, New Gold is Toronto-based, and in this environment, that can cause some problems on closing. So as part of this transaction, Coeur has made a number of commitments to entice regulators to allow the deal to go through. First and foremost, Coeur will keep its Vancouver offices open, while also maintaining New Gold's Toronto-based offices. Combined, the company is expected to have about 1,700 employees in Canada, in addition to 450 contractors. Coeur also intends to accelerate investment in exploration and expansion at both New Afton and Rainy River, while also committing to increase spend at their own Silvertip Critical Minerals project in BC. On the minerals side, they also intend to maintain offtake agreements in place for the processing of minerals in Canada, while also applying for listing on the Toronto Stock Exchange. All right, so let's wrap it up. If we're speaking honestly, the premium here sucks for New Gold shareholders. After Coeur's 12% drop post-announcement, pricing works out to about $7.51 per share for New Gold shareholders, which is a premium of about 17 cents a share relative to their close on October 31st before the deal was announced, or about 2.3%, which isn't great. Outside of the unfortunate premium here, however, the deal does look interesting. While some exploration needs to be done to continue to expand mine life at New Gold, by all accounts, it looks like shareholders are about to own an interest in a free cash flow powerhouse. And well, that tends to attract investment dollars, which means rising share prices, and that's always a nice perk. All right, everybody, thanks for watching. If you have thoughts on the deal, please let us know in the comment section. If there's stories you want us to cover, also let us know about those. And if you want more mining content, check out our website over at thedeepdive.ca. All right, everybody, thanks for watching.